This is Dialogue, and today I'm talking to Mr. Ayaz Merali, who is the CEO and Managing Director of Paramount Bank. Now, let's start by talking about the year that was 2017. I mean, for a lot of banks, you get mixed sentiments about how they performed. But how was it for Paramount Bank?
It was definitely a difficult year. But it was for more than just one reason. I'm sure if you ask anyone, it would be everything surrounding politics. It's politics, and it slowed down the economy, slowed down growth for everyone. That was a part. For banks, the capping of interest rates came in. It was 2016, so 2017 was really how it showed the effect of what really the capping meant. So it was both. But I think, and that combined with the politics, yes, it was a difficult year. So it was more of a year of consolidation. It was more of a year to keep everything going steady, and try and maintain what you had.
So how did the bank perform?
It performed steadily. So from the other year, so we were okay. We didn't. Net interest income went up, but overall, I think the bottom line stayed roughly the same as the year before, and that in itself was a good achievement because of all the uncertainty surrounding the new interest rate capping, and also the politics.
Did the capping of interest rates affect your income from loans?
It did, and I think with the interest rate capping meant different with different institutions. The way I did see it, and if you see the results of many banks, the ones that had a wide margin between what they were lending and what they were paying on deposits, I think those ones showed depressed results. The ones that were competitive enough, they had equally. There was an equal gain and an equal loss. So when that happened, I think the margins remained. So for us, it actually did remain, because what we lost in interest income, we gained in deposit expense. Exactly. So it depends how everyone was placed. So some banks benefited more, and we were probably one of the ones that didn't see that much of a difference because of the law.
Are you also optimistic that this law is going to be repealed?
I think it will be, in some way. I don't think, whilst there is going to be some opposition to it, I think it will be repealed in some manner. I think even though when it came in as a blanket rate. And I think that is what was wrong with it. Because you can't compare every borrower with the same yardstick. It's not possible. It's all different. If you're taking a working capital finance for a year as opposed to a 20-year loan, you can't have the same risk. So, you can't compare that. And that having a blanket rate is not right. So I think it should be. I think if they even change it, it's going to be for short term, maybe medium term, long term. There should be different rates. If that is done, then there is some kind of risk taking that we can gauge. But for it to come in as just one, I think that was wrong.
So the capping is repealed, and then what next? The banking sector has been talking a lot about the repeal itself,
yes,
but not offering the alternative. So what is going to replace this law?
Normally, you would leave it to the market, and you would say, look, it's market driven. So what happens is, if I was giving credit at a good rate, then I should be able to get the good clients. So I know what I want to do with it. So by saying that, okay, everyone should come up with a standard model, you can't have that. I'll have my set niche clientele. If someone is going to come to me because of the service I give, it's like that. It's like you could go and eat at different places, fast food, or you could go to a high class restaurant. You're paying different, the same food, you'll still be full. But it depends on what you want. You understand? So I think that's how it's going to be. You'll have different products at different banks, and I think if you're going to shop around and people feel that, look, I'd rather pay this because this is what I'm getting for it, then it's okay. And if you want the low cost, then you can go really and get low cost credit at the ones who are giving you at that rate. But then it comes up with different things that you won't be. Maybe you'll have to wait long. Maybe you're not getting the service you require. Maybe there are so many waiting in line. You have to wait in hours in the queue. So that might be one. But the others, maybe they want good service. They want to come in and they want to see someone get whatever they want and leave. They're paying a little bit more for it. It's okay. It's an open market, but that's, I think, how it should be driven. Yeah.
There's a lot of talk about Kenya being overbanked, yeah, and yet we see a lot of the smaller banks thriving and doing very well. Do you really see a need for us to be thinking or even talking about consolidation in the sector?
I don't. I really don't. I really feel that the more diversity there is, the better and the more stable the market is. It's as simple as that. It's like saying that when we had smaller supermarkets and bigger supermarkets, and we'll say, no, we should all just have one. And if we had one or two supermarkets, and if something happened, like we saw what happened with one of the giants, then what happens? Where does it leave everyone? There are no options. But if a big one leaves, and then there are options, so you see, everything just carries on. And I think if there's more diversity, then there is more stability. And I think that is important. You can't put everything into one basket. You can't. And the ones that you feel that are non-competitive or they charge too much, they'll be driven out by no business anyway. So if they don't make profit, they're not making anything for their stakeholders, why would they be there? They would be driven out anyway. But if there is a market that wants them, who is to say that they should go and bank somewhere else? They want that. Maybe there's something that they're getting that they're not getting elsewhere. And I think that's what we want. We want diversity. Everybody wants to try new things. You have to have new dishes. Everyone wants to try something new.
So, are you saying that a small bank and a big bank are actually equally at risk of failure, that none is actually at a higher or a lower risk than the other?
Absolutely. And that one would make more of an impact. And you'd see that would be worse. Yes. So if you put everything in one and something happens to it, where's it going to take the economy? So it's going to be difficult for that to come back up. See, so it's good that you have options and people actually diversify, and that's important.
2018, the politics is more or less gone.
Yes.
Yeah, and it's looking like it's going to be a very good year. But what is your projection for Paramount Bank and the banking sector as a whole?
It is very optimistic. I'm very optimistic of 2018, and now the politics are over. After the handshake, everything, it's great. I think now everyone has come, it's settled down. Before, everyone used to look behind the shoulders. Now we're all brothers, so we're all carrying on. I think it has really helped, all of this. So now it's all died down, and I think now we're down to business. And we saw the difference immediately. You'd be amazed to see how everything changed overnight. Huh? So it really did change. I see now I see there is a good future for next year, definitely. Also going into technology and how everything for the industry has been coming up, I think there is more. The only hitch, or I do see that every time something is going well, then you come up with additional hurdles. So there's a new accounting standard that's going to bring in its own challenges. And I think with that, I think once we get past that, we should have a good, vibrant financial sector. I think we're looking at some good times now.
IFRS 9 is here with us.
Sure.
I think starting January 2018. What does it mean for the bank and for the industry?
It's not going to bring that much effect for Paramount Bank initially. I think having our products the way we have, having most of our loans collateralized and asset-backed, so I think it's not going to have that much of an effect. This new accounting standard is based on making provisions on your credit portfolio. And if you're well securitized, then it's not going to have that much of an effect. I think it's going to have more of an effect for the non-securitized lending. So cash flow lending, personalized lending, individual lending. I think all of that, if you had a big portfolio of that kind of sectors, I think that it'll make a big difference. But for the industry, it's going to be a big change. And I think for banks, especially on the lending side, it's going to be a big change. Whilst we see that there is interest rate capping that leaves the market, still, for the borrower that needs money for small businesses, and they don't have enough security. Now here comes a new hurdle for them. How do they get past this? Because for any bank, for them to give on non-securitized lending, they'll have to make a provision. So how much do banks want to do? If it is long term, it's more. If it's short term, yes, maybe. So it depends. But I think it's a new challenge, and I think that is one that I see that will make some impact next year. But otherwise, I see the times getting better.
Are you fully compliant already?
Yes, we already are. So we had last year we had extensive training on how this was going to impact and how we were going to do everything. So coming up with the risk-based standards on how you're going to do probability on the risk. I think how you're going to take that forward to all the accounts. So we came up with the standard, and I think auditors saw it, and we said, okay, this is how we trained everyone. So we've gone forward with that. So from January 1st, we have already complied with the standard.
The government has laid out its development strategy for the next 5 years, and they have come up with what they are calling the Big Four: health, agriculture, housing, and manufacturing. How are you plugging into this?
We're actually in all these sectors. We already part. We lend a lot in for transport, infrastructure, health. We have a good diversified portfolio. So where we have already invested in that. So we have a lot that's happening in those areas. So anyone comes in with something new and they want to try on the health side, we're there to finance them. So we're out there. We're doing already. We have a good clientele base in all these areas. So I think if they carry on, then we will be helping in that way.
So where do you see Paramount Bank in 5 years' time?
I would see us. I would see our balance sheet probably double in 5 years' time. I think that we've seen steady growth over the years, and I see with a better environment coming in the next few years, I see that us increasing where our foothold, both physically and also in the mobile and mobile field, to be able to get a better base, a better and stronger, more diversified client base, and also physically to be able to diversify. But I see ourselves, I definitely see ourselves to be twice the size we are today.